Good evening, everybody. Welcome to our Investors Coffee Time at 8 p.m. Thank you for joining us while we're still waiting for the others to come in. We're just going to do a little bit of announcements first before we start. All right. Well, how many of you have already started working? I mean, not working from home. Can you just type your comment down there so at least we know how many is actually going out to work or just working from home? Yeah. Well, at least today the COVID numbers has come down. Hopefully next week there's no jump in any COVID cases lah. Because now we have this new MCO which is in, and everybody seems to be going out. I can already see traffic jam outside of my place. So hopefully everybody is disciplined to distance themselves lah and take the precautions lah.
I'm just curious how many people are dialing in from their car tonight. Because are they stuck in the traffic, or are they just back from work?
Yeah, some started today, some working, some still work from home.
Yeah, if you are calling in from the traffic, just send in traffic. We're just curious to see how many of you guys are actually listening to this on traffic. Oh, of course, you shouldn't be texting while driving. Yeah, so.
All right. Okay, guys, once again, welcome to our Investors Coffee Time. Today, our topic is the key to unlock the full potential in stock investment. And, most of us think that just by picking the right stocks, we are able to be successful. So today, we're going to share with you a more important key, right, to really unlock your full potential in getting the best returns for your investment portfolio, right? And before we start, a little bit disclaimer. So remember, everything that we mentioned here, or or whatever discussion that's to follow, is not any investment advice. They are basically information, right? If you want to make any investment decisions, you should consider getting a licensed investment advisor, all right, to make any investment decision. So we are just presenting the information which I think is crucial for you guys, and we can provide you with the data, we can provide the information, but the decision is still yours lah. All right. So if you have time, you can read the disclaimer, but you're just going to get passed through this fast. All right. Now, for those who are still new with us and haven't used our Equities Tracker platform, it's a platform where you are able to look at company financials, company financial data, okay, historically over the past 10 years, and for you to also do some filtering and some analysis, right, on the platform itself. Okay, so for those who already use it, congratulations. I think some of you have already subscribed to our Genius package, which allows you to continue using the Equities Tracker platform. And for those who are still new with us, you are able to have a glimpse of our Equities Tracker platform. We are giving out a free 2 weeks access to our Equities Tracker platform. Yeah, and this is only for those who are new, right? So for those who already use, I think if you those who already started last month, you have been using it for a month, right? And now you're continuing probably using the Genius platform. So if you're new, you get a 2 weeks you get a 2 weeks access to our Equities Tracker platform. All you need to do is to WhatsApp us at 603-8408-2070. Okay, I repeat, 603-8408-2070. So once you WhatsApp us, then a chatbot will be there. Then you can just guide you on how you actually can get the free access. All right.
Yeah, actually, while those of you who are still streaming in, we're just curious. Those of you who are logged in right now, number one, do you guys think we should continue Coffee Time every day, even post MCO? I think that's the first question. So we say yes if you think so. And do you think 8 p.m. is a good time to continue having it? We're just interested to find out from some of the listeners here. So some of you guys are extremely dedicated. I don't think you've missed any of our 40 plus episodes since we started on March the 19th, right? Very diligent. Every day you guys have been here. Just curious, would you guys like us to continue Coffee Time at 8 p.m.? And whether 8 p.m. is a good time. If 8 p.m. is not a good time, maybe you can suggest a time.
All right, thank you for your response. All right. Okay. A number of them, I think. Yes, yes, yes.
11 p.m. Someone said no, not every day. Time is good. Okay, yes, all right. Yeah, so we got, I think, yeah, 8 p.m. for this month. Okay, that's from Peter. We also have one, Harry Quay is saying that he's working from home with ET.
Yeah, I guess a lot of people still want to have copy time. 8:30, 9, 10. Well, 10
Yeah.
11 o'clock.
Yeah. I guess you can also, listen to this live as well if you're in traffic. But I believe your lifestyle will probably change quite a fair bit pre-March 18 and post-March and post-MCO, because I think there are a lot of companies that are still working from home or practicing working from home, and I think there's like a 1 day on, 1 day off kind of thing, just to make sure there's social distancing at work.
Okay.
Yeah.
Oh, we look like we got a very overwhelming response.
Okay. Oh, yes, on both counts.
So I guess people still prefer at night, lah. And then no one suggesting in the morning or afternoon.
Yeah. All right. We hope these sessions have been beneficial to you, and you just become a more informed investor. Yeah. We hope we were able to achieve some of that as well. Yeah. So tonight, Benny, do you want to continue?
Yeah. For those who are new with us and haven't liked our Facebook page, please do like our Facebook page and also follow our Facebook page to get notifications. All right. When you click the follow the following button there, make sure your notification is on, because we actually get a lot of queries about some of you guys don't receive notifications when we go live. So make sure you like and also follow us, and make sure the notification is on. All right. So if you do that, then when we go live, at least you will get a notification, right? And on a YouTube as well, if you want to get updates from us, whether there's a new video or whether there's a live session, please click subscribe. Of course, on YouTube, you can just search for Equities Tracker, one word, Equities Tracker. Once you search us, then you can just click subscribe. Okay, so once you subscribe, then whatever updates that we have on our YouTube platform, you will also get an update. All right. So that's it for now. Later we'll give you more announcements, more things that we want to share with you guys. All right. But for now, I'm going to pass this to Alvin, and he's going to share with us today's topic.
Yeah. So today we know. So I think one of the interesting news today was, I think, kind of expected, and if you all have not heard it yet, Bank Negara has actually every quarterly they meet up to reflect if interest rates are supportive of the current business environment. As you know, they have actually dropped the interest rates 50 basis points. When I first started, I found this very confusing, right? 1% is 100 basis points, right? So 50 basis point is 0.5%. So I believe we are now at 2%. Am I right, guys? 2%. Previously, they dropped it 0.25. Am I right? And they dropped the SRR, statutory reserve rate, 0.5% or 1%, right, to support the banks and make sure there is enough liquidity, right? Tell us if you guys are happy with the announcement of dropping the interest rates, or where do you think interest rates should be going, right? I think one of the early things that we did mention in this in the Kopi time is that seeing that we are already in a global recession because of the coronavirus, and just to repeat, the recession as defined by economists is 2 quarters of negative growth in GDP, right? So granted that we've been shut down and only essential services are running, I believe some countries are still shut down. Down in Singapore is shut down, right? I think US, half of the cities are open. Some of them are still shut down. I believe Chicago is still on shutdown mode, only essential services. So it is normal to expect a negative growth in GDP. I believe first quarter GDP was announced by China. It was contracted minus 6.8% from the shutdown of Wuhan. So, it's not going to be, I think everyone's really expecting a negative GDP. And I guess the question is, how quickly can we restart the economy, right? So if you think 2% or 1% is good, we'd like to hear and see some of your comments on where do you think interest rates would go. But that being said, I think probably all the traders here are agreement with me that we're going to be expecting low interest rates for at least this year. And not just in Malaysia, I believe also globally as well. Federal Reserve is now 0%. And if you look at it, what better time to get into stocks? Because if you put your money into FD, it's not going to earn you a lot. Yeah. So those who have fixed deposits, you're going to see that, especially 1-2 year, your interest rates likely will come down. Do you guys have any comments?
Yeah. I think we are looking at the cost of getting money is getting lower right now, and of course, like Alvin said, right? I mean, hopefully we don't go like Japan or some other place where you get negative interest rates, right? You have to pay money to the bank to save money. But yeah, I mean, if you have additional money, I think right now that is the best time to look at stock market. Although the market has rebounded, but I think there's still a lot of discounts if you know where to fall, right? And that's the reason why you guys are here, right? Trying to figure out, whether stocks are below its value, right, or perceived value, to take advantage. Right? Because if we miss an opportunity at this kind of time, then really, if you want to get this opportunity again, you're going to wait for the next crisis, which I do not know when it's going to happen, right? So I think this is a time where you already heard the story about the best time to invest is during a crisis. So it's time to take action, basically, right? But I know if you guys who do not have any skills or knowledge, there's a fear on how to do it, right? So hopefully that we are able to guide you through this as well, and hopefully that you are able to take advantage of this situation right now. Yeah.
Peter, you got any comments?
Not really. Nope. Yep, I hear you. Yep.
Yeah, I was quite surprised. I think this new MCO thing is still quite shaky. Because I've got a friend actually who owns a pub, right? And just because 1 or 2 places they didn't follow the MCO SOP, now they ask everybody to shut down. So that guy was so eager, right? For the past weekend, the whole weekend he was cleaning up the place and all that. And now suddenly the guy, I think the police just came in and informed him that, you know what, you cannot open until further notice. So it's a little bit. It's still. I think people are still testing out. Whether it's really going to be open, and like Alvin said, things are not going to be the way it used to be, right? And even our DG, even WHO said that we have to get ready to live with COVID-19, okay? Probably until the vaccine comes, which is probably going to be in a year or 2.
Yeah. Okay, so today, what are we going to talk about, right? Today, we actually, I think we spend a lot of time in Kopi Time and we talk a lot about stocks. We even bring in CEOs. A lot of people are asking, I think 2 weeks ago, oil and gas companies or what's going to happen to certain companies. But today we're going to take a little bit of a different approach. Today, actually, because we have a trader, which is Benny Lee. Benny Lee is a trader, right? Peter, formerly a fund manager, right? And then you have me, right? And I think all 3 of us have one thing in common on regardless what technique you use to invest. I think regardless of what technique, whether it's momentum or trading or anything else, we all have one thing in common. We actually are going to be measured by our returns in our portfolio, right? And today's discussion is about portfolios. And why do we want to discuss about this? Because this is hardly something that people ever talk about. Because if you look at 99% of the market, everyone's a stock picker trying to find what's the next stock, whether this price is high, whether this price is low. Don't forget, there are 4 things that you have to key in when you trade, right? You need to tell what stock to buy, whether it's buy or sell, and the price. And the last thing you need to key in is quantity. So quantity actually refers to how you manage your portfolio. Now, just to get it sort of straight, and this is where I think we want to get some Q&A from you guys as well. Just to be clear what we mean by a portfolio actually consists of stocks or the value of your shares, including your cash you have in your trust account. Okay, so that is the definition or the proper definition of what we call a portfolio, which means, right, so this is actually covered in the ET online campus. If you still have not joined us, there are more than 20 hours of e-learning that we've actually developed. It's absolutely free for you. We are doing this for charity, so all you need to do is donate a minimum of 100 ringgit to charity, and you and 3 friends get to enjoy the e-learning absolutely free, right? ET online campus. Now, so I did talk about this before, and today's really is a discussion about portfolios, right? So if I'm a trader or I'm an investor, one of the things that we covered in technical analysis versus fundamental analysis is that we agree that both needs to be in 2 separate portfolios, right? Yeah, and I think one of the things that if you look at this, the cash versus equities or stock holdings, I think this is a very important subject as well. So the question is, how much cash should I be keeping now in my portfolio, right? And here's the thing: if your definition of a portfolio does not include the cash, it simply means that you may not actually have a cash strategy, right? And that is very important as in terms of the aspect of your portfolio, right? I don't know, Benny, you want to comment on maybe how you look at portfolios when it comes to trading, and then followed by Peter?
Yeah, I think Alvin mentioned earlier, because most of the time we don't think about the quantity that we want to trade, right? We call it position size, right? And it's very important to know having a portfolio is like having a business, and portfolio is like an inventory, right? You really need to know what you have, right? The cash that you have, and also the stocks that you have, so that you actually know what you're doing, right? Because previously when I started trading as well, it's just buy and sell, buy and sell, buy and sell. We write it down, on a piece of paper. At that time, I still don't know how to use Excel. Was still right. Just have to write it down on a piece of paper and write a journal. But you can write it down, but you can have like a book of few pages or many pages, but you cannot reconcile them, right? And it's very hard to see where we are going if you don't reconcile all the data. Because especially when you're trading, because trading is like, you do a lot of trades and you'll definitely forget a lot of those trades as well, right? So I think it's very important to have a portfolio, so that at least, number one, the main reasons why I use portfolio is to manage my risk. That's my main reason. So in trading, of course, it's not like investing, because investing is in nature. Trading portfolio is, I think, more important, because there's always cash and stocks. It is very liquid, right? If you have opportunity, if the stock starts to go down, you cut your losses, and then you find another opportunity, and a new stock comes in, right? So there's always equities. Most of the time, there's always equities in that portfolio. But only, for example, when the whole market falls, then you probably hold more cash, because most of your stocks probably got stopped out, right? Or you took profits. So it's very important to know, then at least at least that when one thing is, if you have too much cash in your portfolio, also for me, it's like not doing anything that is not productive, right? What are you doing with your portfolio? So I need to make sure that we have actually at least, for me, the cash that we have is well traded or invested.
Peter, you want to just maybe share some examples, maybe from your professional career as a fund manager? How important exactly is a portfolio?
My approach, for those who have been, I won't say following me, or been hearing what I've been saying, I think I have been saying quite a few times is that my approach is a bit different. I always believe to be fully invested. When I meant fully invested, I don't mean 100%. Yeah, what I meant to clarify is, when I say fully invested, means on average I'm at least 90% invested. So I'll have at least around plus minus 10% cash on that basis. But what is more important in the perspective is, okay, like for instance, for those who have portfolio, have started investing in shares, if I were to ask you this very basic question, right? Do you know what is your biggest position that you have? Okay, I want to say one. What is the top 3 biggest position you have in your portfolio? And the second question is, do you know what is the weightage of each of these 3 biggest positions in your portfolio? I think these are very critical information that if you really want to be serious in having your own portfolio, these are the things you need to be very well aware of. That you know what is your exposure, what's your 3 biggest exposure, what is the percentage of your 3 biggest exposure. I believe most of us, we don't take this seriously enough, that most of us, we only able to roughly name, oh, I think this is my biggest position, and you're only estimate, I think this is my percentage of my portfolio. You see, even for professional, you talk about professional fund managers, right? This information are actually very, very critical. In fact, every morning, I start work very early. When I'm a fund manager, I start as early as 7 a.m. in the morning. So the first report I expect from my colleagues is that I need every morning before 9 o'clock, I want to have all the position of each and every portfolio that I manage. So the report can come into individually, like each portfolio, what is the stocks I have, what is the percentage I have, what is the gain or losses for each individual stock. I need to see that report every single morning. And we actually automate the whole process. I mean, really, no fund management houses actually uses Excel anymore. I mean, it is crazy to assume. Imagine every day, evening by 5 o'clock, you update the share price day by day. And actually, this system really is not cheap. I think, as I mentioned before, the first system we always use is Bloomberg, and Bloomberg actually costs us around easily 13,000 a month, on a month at 13,000. And the second, usually we have this software called, generally called a portfolio valuation system, or portfolio valuation system, where this software usually, at the end of the day, it actually automates, it links to all the prices and actually derive and calculated automatically for you what is the end value of a portfolio. And again, on a professional setup, coming from asset management firm, again, it's not cheap. This kind of portfolio valuation system easily costs you at least 1 million a year. It is really, really not cheap. But for us, it is something very, very essential, because no asset management firm is going to do manually on Excel. It is going to be very, very crazy. So if you are serious about managing a portfolio or having your portfolio, right? I mean, these are really the parameters you really need to know. So it really make you a more informed investor, and you are really well aware of what is actually in your portfolio.
Peter, since you're on that, I mean, we have a few questions here. Why do you think that? Because someone asked me this before in a class, but maybe independently, I'm going to ask you, right? Why not Excel?
Why not Excel? Okay, if you are an investor with only 1 or 2 stock, right? Okay, fine. I mean, one every day you update 1 or 2, right? That's number 1. But imagine once you start to really build a serious portfolio, say of 20 to 30 stocks. So imagine every day you have to go and key in the Excel. That's number 1. Number 2, unless you really understand how the accounting mathematics works, right? You really need to think of, okay, unless you're really from the industry where you really understand how the whole mechanism works. Okay, now if I tell you, you buy one stock. So if you've got, say, assuming I've got 30 stocks, right? But you see, you don't buy all the 30 stocks at the same time. Each stock, maybe you'll buy 5 times of different laddering down, right? So you have different transactions. So my first question is, do you know how do you count your average cost? Number 1. Number 2, if you buy 1,000 units of this stock and tomorrow you decided to sell at a profit of only 100 shares, what is the accounting Excel are you going to use? So you got all these intricacies that, unless you are from accounting background or you're from finance background, or you really understand how all this mathematics works, right? If you know all those things, how it works, by all means you can use Excel. But imagine, okay, for instance, even when receiving dividend, how do you treat receiving dividend into your portfolio? So you can use Excel, but unless you really understand all these mechanics of it, and honestly, you're only able to understand all these mechanics of it, either you're an accounting student or you have an accounting background, or you are from the fund management industry. That allows you to actually understand how all these things works. If you are not an accounting person, or you're not really involved in the accounting or in the fund management industry, I can quite assure you, whatever Excel you build is not a complete portfolio mathematical perspective. You will sure miss out a lot of information. You wouldn't get the actual value of your portfolio.
So Benny, how about you? How important? I mean, if trading, right? My guess is there should be more transactions than say generally a value investing portfolio. Do you agree that Excel is good enough?
Well, I'm not an Excel guy lah, so definitely the portfolio will help me a lot. Because the thing is that because when you do a lot of trades, right? And for example, if let's say I've been trading AirAsia, let's say lah, right? If I can, let's say, pull out the AirAsia, all the transactions I've done for AirAsia, right, and I see how the performance was on AirAsia, then I at least understand whether it works for AirAsia, right? So if I'm going to do this on Excel, really, I do not know how to actually find all this, and I do not know, how do you actually calculate? I know it seems simple to maybe some of you guys lah, but even to calculate, profit sometimes it can be difficult, and I have to keep on updating it one by one manually. Really is not easy, especially when you're trading, when you're doing a lot of trades, right? To do it manually is troublesome, we want to focus on the trading, not on the Excel spreadsheet, lah. So for me, the portfolio is like an assistant, right? Without the assistant, it's really difficult, lah.
Okay, so just now there was this a question actually from Mei Li for Peter. When Peter say, how do you treat dividend received? What does he mean by that?
Okay, if you see, for instance, right, how do you incorporate dividend received into your return in your portfolio? Technically, if you look at dividend, it goes straight to your bank account, correct? Okay, how I go incorporate, see, dividend, but dividend is part of your return, of your portfolio return. So are you going to be constantly aware that, okay, I received this much dividend from my bank account? Then you must be constantly aware to actually add whatever dividend you receive into your portfolio to actually generate your total return. You all follow what I'm trying to say?
So basically, you're saying that we'll get lost because now I believe because Bursa launched e-dividend, right? Which means that they go directly into your appointed savings account with your broker. So it's not with your broker. So really, there might be tendency to actually spend that money also. I know it happens to me. So first one to admit.
Okay, there's an earlier question, Alvin, by Alvin. He said, why we need cash in our portfolio?
Why? That's okay. Let me try to answer this. Okay, so the definition of a portfolio. So, example, if you set up a portfolio correctly, my personal definition is, let's say I'm going to put like the Genius portfolio, we put $10,000 in, right? At any point in time, I know how many stocks I would have bought and how much cash balance I have left, right? So what happens is that, I hear quite often people say, when the markets go about to crash, then we sell out and keep more cash, right? That is known as a portfolio cash strategy, right? So what I'm trying to say is that not that it must have cash. So if you're like Peter, who said that 90% invested, which means that his cash on average should be at least 10%. Not at least, it should be minimum 10%. That's why he tries to strive to get to. That means he's almost fully invested all the time. So it's less to do with having cash in your portfolio, but more the fact that you must understand that the more cash you have, especially now, since we're talking about very low interest environment, it's harder for you to actually make a total return. I'm going to give you an example, right? let's say I have a 10K portfolio and I only invested half. Even if I manage to double whatever I invested, 5K become 10K, and let's say I don't do anything my 5K, my total portfolio will only be 15K at the end of the day, and it will be up 50%, right? So actually, the more cash you have in a bull market, the harder it is for you to actually hit your targeted returns. I hope that makes sense.
Yeah, I mean, more cash in there without doing anything is like basically your cash is not working hard enough, you're not working hard enough, and that happens to some fund managers as well, right?
Yep. Yeah.
Okay, that's let me see. Yeah. Bank. Okay, this is
Sorry, go ahead. You go ahead.
yeah. There was one unrelated question. This is by Sun Engkui. Is banking share still considered as investment grade? Have we ever considered banking stocks as investment grade?
Hey, Peter, what do you think?
Banking is the linchpin of the economy, right? And if you look at it, right, if you ask yourself this question over the last again last 15 years or the last 20 years since the year 2000, have you ever seen a new bank that actually came about in Malaysia? None, right? So whatever banks we have, they have been around, well established, I think for the last, I don't know, for as long as that the economy. I mean, bank is the linchpin of any economy, right? And by that definition, unless you have some new banks that come out, then maybe that particular bank you can say as maybe is a startup or emerging or anything. But most of the banks we have in Malaysia, or if not all the banks we have in Malaysia, they've been around for what, at least 20 to 30 years track record and history. So by that, it's time tested, as in proven. We have yet to see, and all of them have quite strong capital adequacy ratios. So by that definition, I said, yeah, technically they're still investment grade. Yeah.
I actually scrolled too fast. I lost some of the questions. Benny, it has to be you. I lost some of the questions because my Facebook thing, disappeared.
Yeah, because there are quite a number of questions which is unrelated, so I'm trying to find the one that's more related. Yeah. I saw one. Hold on.
I accidentally closed my Facebook, so I don't have the questions. It disappeared.
Yeah, this thing when you go and run live, it's a little bit difficult to search for this.
Yeah.
Okay, there's one question earlier. I'm not sure from who, but it's asking about how do you determine your sizes for your portfolio?
Meaning sizes as in?
Sorry.
So what's the question?
What's the best size for a portfolio? I'm not sure whether she's asking, because the question was quite general. I'm not sure whether she's asking the percentage in the different stocks in your portfolio, or how big is the portfolio. So the question wasn't really. Maybe you can ask a question again for those who have asked the question.
There is no ideal size of the portfolio. I think for those who actually attended the Mandarin session, I think a few days ago, I can't remember exactly which day, we did discuss about this. I mean, do you really need 50K or 100K before you really start a portfolio? I think let's be realistic. As an investor, I think the biggest mistake you're going to do in your life is not to get started. Even if you have only 500 ringgit, start investing and start your portfolio. You don't have to wait until you have 20,000 or 30,000 or even 50,000 to start. So the size of there's no ideal size of a portfolio. The most ideal size of a portfolio is the portfolio that you can afford, you can start to build, and you don't have, and not by borrowing money or lending or taking any money from anyone to actually start, right? So I think the ideal size is a very individual thing, as long as you start building your portfolio.
I think, Peter, maybe in terms of size, I think they're talking about maybe, I'm just trying to understand what the question is trying to say. So is there an ideal size for, let's say, a 50K portfolio? How many shares ideally should I have? And then let's say if I have a $10,000 portfolio, how many number of shares, sorry, not number of shares, how many stocks or types of stocks I should have? Is it 10 or is it 20 or is it 5,
Okay, that really depends. There's a lot of factors. Again, every portfolio for every individual is very, very different. It really depends on a lot of factors. If I can just name a few, right? One of the factors is, what is your risk appetite, right? Are you someone who is very high? Okay. Do you want something to be very, very safe, where you want to diversify your portfolio? You say, I only feel comfortable that if I have 30 stocks. Bear in mind, if you say 100% portfolio, if you have 30 stocks, if I take on simple average, that means every position you have is a 3% position in portfolio. Okay, now, when I was in the asset management firm, whether you believe it or not, fund managers, technically, if they have 3% in the stock, they consider it as high. It sounds pretty ironic, but that's actually the definition. When I still remember when I first started, right? When I usually my style is a bit different. My bare minimum percentage for a single stock is 5%, and I go up to even 8 to 9%. And I don't go up to 10% simply because when you're managing unit trust, there is this guidelines that our exposure per fund on a single stock cannot exceed 10%. So my style is trained due to that, is limited due to that guideline. And I've been doing it for so it becomes a habit to a certain extent. So for me personally, my style is between 5 to 7 to 8%. So if you use that mathematics, right, 100% that you say on average divide by 5. So average my portfolio is around 20 stocks plus minus, or I can go up to even 25. So that's how I look at it. But say for instance, if you are someone, okay, let me put it the other way. If say you go a very safe, say maximum 3% of each stock, it is nothing wrong. It's nothing wrong. But you must understand there's always two sides of it. If you're over diversified into say 30 to 50 stocks, right? So average your position in the company is 2 to 3%. If you hit right, if you manage to find a jewel in your portfolio, the reality is it wouldn't move your portfolio much because your exposure is only 2 to 3% of it, right? And you got 50 stocks, right, out of there. So that is the downside. But on the positive side is if there are some wrong calls in your stock, you get a buffer because maximum impact 2% to 3% of it. So there's both sides of it. But if you're someone who said, okay, I know my stuff, I did my research, I know this company very, very well, then by all means, you can use a very concentrated approach. You need to see a whole portfolio. Okay, I can afford that. I want only 10 stock in my portfolio, right? Each stock I will have 8 to 9% exposure. By all means, the caveat is you really know your stuff, you really do your homework, you know the companies very well. So again, there is no right number. Ultimately, it depends on you yourself, right? How well you know your stuff, what kind of investor are you, what is your risk appetite, so on and so forth. So there is no perfect number, right? So that's why when you go for these courses, right? Outside when people try to tell you this is the ideal portfolio, you need to have 50 stocks, you have 70 stocks. I don't really agree with that because it really depends on you as an investor, right? Every individual is different. Right? I said I did come across in my career, whether believe it or not, I came across a portfolio. The average investment percentage of a stock in the portfolio is 0.2%. The maximum is 0.5%. I'm not kidding you. I saw this kind of portfolio before. So
how many stocks? 300 stocks?
Hundreds of stocks. I have a hard time restructuring it. It was quite a nightmare, But see, it's nothing wrong. It's nothing right. But see, for that approach is a super safe approach because even if you screw up, it wouldn't hit. But the reverse is it wouldn't be a portfolio that can perform because even if you strike something right, it wouldn't move your whole portfolio much. But it is not wrong. So it's not wrong. It is maybe for that person, this is an approach he's comfortable with. So again, it's a very individual thing.
Okay, follow up to
trading wise. I mean, how many shares or do you guys trade like in a trading portfolio? For those of you who want to trade.
Yeah, because I do both futures and stocks, right? And again, well, like what Peter said, I totally agree, right? Because it also depends on your risk appetite. For example, in trading, we have this thing called a money management approach, where you need to put a certain percentage for every trading that you make. What is your risk that you're willing to take, right? So a person who are already, I mean, he's so comfortable. I mean, he's like, Peter mentioned, right? He's so confident about the stock. He knows the in and out of the stock. And when he buy, there's a high chance that his price is going to go up. Then he's probably going to risk maybe like 4% of his portfolio. That means if I have 100,000 ringgit, I'm able to take a 4,000 ringgit risk, right? So that means between the price that I buy and the stop loss level, 4,000 is a maximum risk. So that you can trade a number of shares, so it depends on the share price, right? So for me, right? I normally have a 2% risk. That means for every single time when I cut losses, I already know that I'm going to lose 2% max. So I won't get any surprises, right? So 2% max. So even with the 2% money management that I'm applying, I can hold maximum also 5 stocks only. Because 5 only, not much.
Okay.
So if you do, let's say, a 1% money management risk, that means you only risk 1% of your capital, then you probably can hold about 8 to 10 stocks. So, like I said, if you are still new, not confident yet, maybe you start with 1%, then slowly you go up.
1% is how many stocks again? Sorry?
1% of capital. So that means if, it depends, right? So if let's say 1%, let's say 100,000, right? So 1% is 1,000 ringgit, right?
Yep.
So that means I'm able to risk that loss of 1,000 ringgit. So let's say my stop loss, I buy a stock price which is 1 ringgit, and my stop loss is 90 cents, right? So there's a 10 cents risk. So how many stocks can I buy so that 10 cents per share can become 1,000? Right? So that means I can buy 10,000 shares. Right?
Okay.
Worth of that number. So after 10,000 shares, if that stock is 1 ringgit, that means I can buy 10,000 ringgit for that shares. So it depends on your risk, it depends on your stop loss, your trading risk, I call it. Yeah. So 2% means you can do probably like say 4-5 stocks.
Oh, okay. That's quite an interesting approach, actually. I got one question from Raymond asking me what risk management strategy. Actually, my risk management strategy is quite easy. In terms of portfolio, I don't like a diversified portfolio because I'm not a unit trust, right? So if you're not a unit trust, just like you're running your own portfolio. So the beauty about running your own portfolio is there is no regulation and there is no mandate. Okay, so you can do whatever you want. But of course, if you do whatever you want, you also try not to lose money, right? So my risk mitigation strategy is really looking at those stocks, and if you can see on my screen here, what we have actually done is, if you guys have attended the ET Online Campus, I've shown you guys 6 different categories of stocks, right? To say that most stocks start up in the startup or newly listed stocks are at the bottom, and then they move into different modes over time, right? So one of the things that I do is I actually split my percentage in each category, and I manage the risk from there, right? So for example, I won't put 50% into say a turnaround company here, right? Because that is just too risky. So if I can put a pointer here, so I won't put all my 50% of my stocks in a turnaround company. So instead, what I do is actually limit the risk per investment, right? So if it's really highly risky, I try not to go above 5%. So that's something that you just put, but that is a personal sort of a number, right? So there's no right or wrong answer. But if it's very, very risky, and you just have itchy fingers, sometimes we have itchy fingers, where we look at the numbers don't tally, but the story is very sexy, right? So what do you do? You put even less, maybe 2% of your total portfolio. So that's the whole idea that you must have when you're investing in stocks. You must think that you are managing a portfolio and you're not buying 1 stock or 5 stocks. That is where it will change your mindset completely, right? Sorry.
Yeah. So on this risk management thing, I think it's something very interesting. I mean, again, in my career, we have to face our investment committee quite often. So I always got this question very often, right? The committee asks, so how do you manage the portfolio risk, right? So as irritating a person as I was or I am, I think I still am. I'm too straightforward sometimes. So my standard answer to that is, look, when you manage a portfolio, right, your risk management started before you invest, which means before you invest in that stock, make sure you know about the stock, know that what is the risk of the stock, know how much are the chances that you are going to be wrong, what is the maximum losses. You don't go and invest in the stock and then decided, how do I manage the risk after you invest in the stock? So risk management comes by how much you know about the company before you invest. So don't go into an approach where let's invest first, and after that, let me think, how do I manage my risk of my portfolio?
Yeah, so I think that's what an indication, because when we do a lot of talks and in conferences or whatever, people ask you, "Hey, what should I do with the stock now?" So that means clearly, the person doesn't have any. Understand? That's why he's asking the question. Isn't it? That's exactly it. And everybody is asking. It's like maybe 90%. Out of 100 people in the audience, right? Maybe 70 or 80% will be asking this question, right?
Exactly.
So I hope. Now you guys are in copy time. You guys be hopefully that you don't ask this kind of questions when we see you outside, lah.
Maybe what would be interesting if you guys can add in your comment below, what is that stock as a total of percentage of your whole portfolio, that means cash plus stocks, right? Your number one stock, right? What is the percentage? I'm just curious to see how many of you guys can actually come up with that number. It's just a percentage. Don't give me the amount, right? So is it that one stock you have, the biggest percentage of stock you have in your portfolio? What is the percentage of your portfolio? Because generally, if you can tell me this or you can tell me that, you can really already assess the risk of your portfolio. Right?
Yeah.
Okay, if you say you got 80% of your share in Asia, I want to say right now is you know what I'm trying to say. That's where we're trying to get at in terms of talking about portfolio management, right? So I got 180%, I got 145%. Well done. I mean, if you guys can answer that, 45%, okay. 100%. So I'm talking about one stock, just one stock. That means one stock. Your top stock, right? What is the total percentage in your portfolio? Okay, including the cash that you have. I'm just curious to see where you guys are at. Okay, 10%, 33, 30%. Wow, 20%, 5%. Okay. Alfred is asking, is it a good time to get share margin financing? So you can increase the percentage, right?
Well, I'm not sure whether they're going to reduce the share margin finance rate, right?
Yeah.
Banks being banks, although the OPR may come down, but it's up to the bank whether they actually want to reduce. But normally they reduce, right? But I don't know how much it is, So I mean, if you can make much more returns than that interest that they're going to charge you, then you can, But then again, because you're leveraging, and leveraging is a double-edged sword, you have to understand your risk as well.
Yeah. Look, I mean, just maybe a last question. So when we talk about percentage, what I'm showing you here is our demo portfolio. Just a screenshot very quickly, but to give you an idea what we mean by percentage, right? So if you look at these are 1, 2, 3, 4 stocks that we have in our model portfolio. This is a $200,000 portfolio. You're gonna see that the first one has 11.61%, and understand that these percentage change all the time, right? Depending. So if one of your stocks shoot up very high, right? This percentage may drop because it's on a total portfolio basis, right? So if you can see 1, 2, 3, 4, about 4 stocks represent about 40% of this portfolio. Just to give you guys an idea what I mean by percentage. All right, I've actually blanked out the shares so that you know I don't get in trouble.
I was trying to see what top 4 was that.
Yeah, it's already hidden, so you can guess by the price. That's the best thing, and just guess by the price. So what do you guys think if in your portfolio, some of them actually have written as low as 50%, some of them has put as high as 50%. What are your thoughts if you have 50% of your portfolio in one stock? What do you guys think? So I got 40%, I got up to 60%, right? What do you guys think if it's 50%, 60%? Hello?
50-60%.
Yeah. Or even 40 and above or 30 and above. One stock, right? One stock.
Yeah, for one, I mean, yeah. Let me see. I've been really confident with that particular stock. Maybe you love that company so much that you invest most of your cash in that company. I do not know, right? There can be many reasons. But I guess maybe it could be a stock tip. It could be something that you are buying on.
Would you say that the higher the percentage, the higher your conviction is?
I guess so, man. I mean, you have to be really confident that this stock will perform. For me, even if it's 30% and above, even for trading, it's considered quite a lot already for me.
You see, as an investor, you must understand this. The only certainty is uncertainty. Even as much as you are 98% certain or sure this stock is going to perform, I can tell you that 2% will definitely happen, whether you like it or not.
Yeah, that one I agree.
I've been through a lot in my career, right? I have been through a lot of stocks where you are really like 98%, you're super sure that, okay, this stock is going to perform. There's a 2% chance something exploding, and guess what? That 2% always never fail. It always happen. Never fail not to happen.
Yeah.
So never be too sure. Never be too sure.
Yeah. And one of
the, sorry, Benny, you go ahead.
can just add a bit, because one of the things that we always get a question when we do speaking or whatsoever, right, is like what stock to buy. Right, I think that's a good question. I mean, right now, but the thing is that if you want to buy that stock, right, how much you're going to buy? You forget the quantity part, right? You're going to silang the whole thing, or if you already have a plan to include in your portfolio, then fantastic. That means you know what to do and how many shares to buy. That means you're really ready for it. Like, really have a portfolio. But if you're just going to a seminar and ask what stocks to buy, and tomorrow just silang and buy to make money, then like what Peter said, that 2% will happen.
Really, no, seriously. I did my homework. You studied the whole thing. You're so certain, right? But the lesson that in this industry is that this the only certainty is uncertainty.
I think the 2% happened on March 18. I can tell you exactly what happened. That's when the 2% happened, all right? Yeah, and that's really to remind us that we are not invincible, all right? I think someone asked me here, right? How come number 4 here 110, but then no cost 0 fell from the sky? Is it? This is our ET platform, the portfolio sidekick, where we actually calculate this based on your actual return. So this is what we call free shares. That means you've already recuperated all your costs, all the shares that you're currently holding is free. All right. Just to give you guys an idea. Okay. Actually, for those of you who actually subscribe, we just want to highlight as well in terms of our portfolio. We actually have already launched our 2 portfolios, which is the 10K Genius portfolio. This is real money. Sorry, it took some time to set up. I was struggling with the banks a bit, but it's a new portfolio, and we put in money, and yesterday we started trading. So for those of you who subscribe, you can actually see it. And this is updated at the end of the day, okay? So when the contract notes come in, then we key it in, and you see all this is already inside there. I know some of you guys ask, if my colleagues haven't called you to sell out your portfolio, I do apologize. Please drop us a PM. We may have missed you, or it's just a bit of a backlog at the moment. We've also set up something else. It's actually a Sharia portfolio, right? This is for the first time we're actually setting up a Sharia compliant value investing portfolio. Now, if you actually do some research into Sharia, we did this actually about a couple of years ago, right, Benny? We did this a few years ago. We were quite surprised that Sharia stocks actually outperform, or the selected Sharia stocks we picked actually outperform the conventional non-Sharia stocks, right? So we decided to give it a shot. So this is also a brand new portfolio. However, because we only thought about it on Sunday or Monday. Actually, I have to thank Aaron, right? Aaron, if you're listening, thank you for giving us this idea. He's saying that why don't we set up a Sharia portfolio, because it is different. So because it was so rushed, this is a paper portfolio. That means it's not real. But the numbers were the things will also be updated at the end of the day as well. Okay, just to give you guys an idea. So it's a 50K portfolio. So now we have a 10K, we have a 50K, we have a 200, we have a 10, 50, 100, 200, then 500,000 portfolio, right? So this is what we have done, and please be patient with us. I will be actually uploading some tutorial videos on the portfolio as well. There's a total of 7 new videos that I've recorded that you can actually go to ET Online Campus or YouTube page. It will actually show you step by step actually how to use it, right? Actually, we had some questions just now, Peter. Some of them were asking how come why is there only 30% invested in some of these portfolios? You want to maybe answer that?
Okay. Before I answer that, I saw a question by 𝘱𝑚, which is 𝘱𝑚 is asking what is actually a genius portfolio. I think the genius portfolio was actually set up to a certain extent to actually take into consideration there's be a lot of first-time investors, right? And I think that we are trying to assist investors. As we can't expect you to have 50 or even 100,000 or 200,000 to start invest. That's why we intentionally create a portfolio that is 10K, which is small enough, so that is as a guide, for education purpose, and not as an investment advice, so that you all will have a mindset, hey, look, I don't need a big amount to actually get started to investing. So as Alvin mentioned, that this 10K Genius portfolio is a real portfolio, it's a real cash portfolio, right? So all the transactions are actually real. The 50K share portfolio is a paper portfolio. As Alvin mentioned, no, this is actually due to a last request, so we actually set it up at quite last minute. So we really haven't had the time to set a proper portfolio for it. So we actually are doing it at a paper portfolio basis. Okay, why if you look at this 10K portfolio and the 50K portfolio, for those who already have access to it, you'll notice that both the invested level is quite different now, and even the strategy is very different. I think one of the reasons is, of course, the size, right? Assuming if you are having a capital of say 5 to 10,000, right? Let's be very realistic. If you think about it, if you say I want to have average 5% exposure to a company in my portfolio, so if you work out the mathematics, right, for a 10,000 portfolio, if you want to have 5%, that means your average investment cost per investment is 500 ringgit. And at 500 ringgit, if your transaction cost is 12 ringgit, so your cost per transaction is pretty high, right? So that means your actual cost is 512 ringgit. So it actually goes up quite high on your average cost perspective. Because don't forget, when you count your cost of investment, it's not only the share price, it's not only the price that you purchase, you have to add in your transaction cost. So for a 10K portfolio, we think that to actually even out on the transaction cost, we have a more normalized or acceptable transaction cost. We think that an average 1,000 ringgit per stock is actually what is ideal. So that's why we put it at 1,000 ringgit per stock that we buy, which is plus minus around 10% of the 10K. So that explains why for the Genius portfolio, we have lesser stock and higher percentage per stock. For the share portfolio, it's 50K. So that you actually have more room to actually play with the cost, right? At 3% of 50K, you're talking about 1,500 ringgit, right? So actually, it's still quite efficient in terms of your average cost perspective. And it is a strategy which we actually teach in our ET courses, right? There is this certain technique of how do you build a portfolio. See, a lot of people think that when I want to build my portfolio, I use a silent style. I like this stock, this is what I have, silent. I'm going to buy all today. But if you really go through our courses, you actually start to realize that it's actually not a good way to actually invest in the company. You must have a certain strategy of actually what we call as a laddering basis, right? Where you actually don't buy everything at one time, but you actually stagger your buying so that you get a more efficient strategy or more efficient cost from that perspective. So that is the reason why you notice for a share portfolio, it's deliberate that we don't really go all out at the same time to actually completely build the portfolio on one day itself. Yeah.
Look, I think we've got quite a few questions regarding the Genius portfolio. So maybe I'll just take 5 minutes and just do a very quick share with you guys. Now, as you all know, those of you who actually signed on with our ET Online Campus, if you haven't done it yet, please do so. Go to charity.equitystriker.com. We've got more than 20 hours of e-learning videos for you for value investing done by myself and chart analysis done by Benny here. All right. And in fact, tonight we're going on every week. We have a once an hour mentoring session. Both of us, we go on to the Facebook page and actually do mentoring and answer any questions that we have. So it's a 1 hour session every week. It is free to join in the sense that you just have to donate 100 ringgit to charity. Please, I think some of you guys have seen the news yesterday when there were very, very long lines at the pawn shop, PAWN, okay, pajak kedai, right? And you guys can really now firsthand see how serious this situation is when we have locked down for 6 to 8 weeks, right? The people that actually, some of them are actually very severely affected with actually no food because they cannot work. So I'm my message is very simple. I think in investing we can do a lot of good things. I think this is one time that we actually need to be there for not just a certain segment of Malaysians, but all Malaysians, so we can get through this difficult time together, right? So I count myself very blessed to have food on the table every day and not have to worry. But the next person does. So what we're doing with this charity drive is to bring awareness to this situation. What we're giving you is free e-learning courses and also mentoring session by myself and Benny as well, right? So please go online. In less than a month, we are very proud to say we have actually raised 137,335. Just for a note, please don't give us, don't donate money directly to ET. I just need you guys to donate directly to the charities that we put down. If you want to do your own charity, that's fine as well. If you don't know any charities, we actually have some listed on the page as well, right? So please be generous. We're only asking for 100 ringgit. We split it by 4 friends. It's only 25 ringgit. I think all of us are lucky enough to have a little bit extra. So please share that. So that's something that we hope you can partake in. That is our ET Online Campus. Those of you who have been asking us about this portfolio and how and what is this package that we're talking about, I'm going to quickly share with you guys because we only launched this about 5 days ago. So one of the things that we realized that a lot of people actually do like what we do. You guys actually done the trial and you actually like to use the system. So one of the things that we're doing is very quickly, we have actually come up with a new combo package called the Genius package. Okay, so now everyone can be a stock market genius. All right. Number one, you actually get the 10-year data. That is all bundled in. You also get the franchise quality analysis. You get the price CAGR. You get all the good stuff about whether the company is good or bad. So this is facts, not bad. Okay. The second thing that we have actually included is that we actually have a software where you actually can track your portfolio. So you don't have to use Excel anymore. If you have more than 2 or 3 portfolios or you more than 15, 20 stocks, this portfolio system actually helps you track your trades, your dividends, your bonus issues, your capital changes, all that, so that you know exactly precisely where you are whenever you make a decision to buy or sell. That is the most critical part, right? Inside, we call it your sidekick, right? Inside your sidekick, you can track all your risks, you can track all your dividends. It's a dashboard all in one place. So if you've got 3 broking accounts, it actually helps you consolidate the reporting on the portfolio inside this platform, right? What we have done is actually a new bonus. Because of COVID-19, we got a lot of questions regarding, can we set up a COVID-19 portfolio? And we actually did just that. So we started, like what Peter said earlier, is a 10K portfolio. It's called the Genius portfolio. This is for beginners who want to start. What we do is we just started yesterday, right? So what you actually can see is if you were to practice value investing, how would we do it? So we actually just published our portfolio for you guys to look at it. Actually, the bonus was actually the Sharia portfolio, which is the 50K portfolio, which we understand some of you guys have been asking, right? So if you want to check out the Sharia portfolio, you also can. Now, on top of the platform and also the portfolios that we have to offer, we also offer our research, right? The research that we do is actually very detailed. I call news, analysis. Again, news is not analysis, right? So every month, one of the things that we actually do every month is actually we share our research with you, either through a report format or actually through a webinar like this, right? And all this is under our Facebook private group under the ET Online Club. So this Saturday, we actually are going to talk in depth about the semiconductor industry. So if you are interested about the semiconductor industry and the supply chain and why it may benefit from COVID-19, do stay tuned. Saturday 3 p.m. For all our subscribers, you actually have access to that. Peter will be presenting. I will be moderating. Okay. Now, we put everything together, so really you don't need anything else except a trading account. That's all you need, right? So what we've done is 2 very simple plans. One is a 240 ringgit a month if you don't want to sign up for the whole year. So if you sign up for a month and you say, look, after 20 days, I don't want to renew, you just have to click on the I don't want to renew, and that's it. Otherwise, automatically it gets charged every month, 240. Very convenient. However, if you sign up for 1 year subscription, you actually get to save $480 for a whole year. I know a lot of you guys have picked that. And on top of that, we are actually giving out those who sign up for free. Those who sign up for the 1 year package, we're giving you an Equities Tracker T-shirt. Okay, absolutely free. I know some of you guys, yeah, right. So, but please bear with us as we send it to you because technically we're still on an MCO. So we haven't gone back to the office. We're still working from home until the 12th. So after the 12th, that's where we're gonna start processing and sending you those t-shirts. Okay, so please be patient with us. All right. Yes, Benny, you got any questions?
So where do they subscribe, Alvin?
So all they need to do is if you already have an equities free equities tracker account, all you need to do is you check your email or WhatsApp. You would have gotten a link where you can click to subscribe. If not, if you go into your equities tracker, there is under my profile, you can click to subscribe as well. However, if you need help, just send a message below, say that you need help. I'll make sure someone gives you a call or gives you a message or gives you a PM. If you're very impatient and you want to call us straight away, you can call 0384082070. I repeat, 0384082070. Okay, you can call us.
Yep. So the Genius package includes a priority chat support, so they can get immediate customer support, right?
Yeah. Yes.
Yeah. So guys, if you really need any more questions, you can just you can just even comment there. So our guys will look at your comment and they can assist you. Or just like Alvin said, just call us or WhatsApp first at 603-8408-2070, right? Or just call us at that number. Okay. And if you need any inquiries, you want to know more about the package, call us as well. Okay. We are more than happy to explain to you what's all about. All right.
Yeah, I can also very quickly show them what kind of sort of portfolios that we're talking about. I mean, since today we're talking about portfolios, right? So we might as well sort of to give you guys an idea what we mean by portfolios, because ultimately the portfolio, you are going to be gauged not on how much money you make on one stock, right? I get this very often, right? So I meet a lot of people and say, wow, I made so much money on one stock, right? But they never talk about the stocks they lose money on. Right, but that's only what I call shock scenario, right? Because ultimately, at the end of the day, it is what you make minus what you lose. That is what you actually make. Okay, so don't shock scenario. That's why we talk about portfolio. So if you click on
sorry, Alvin. There's a question here also from Ahmad Akashia. He says, do you have a target holding period for your Genius portfolio?
So our portfolio is 5 years minimum. So we try to double this portfolio, double the initial amount over 5 years, which means that it equals to about 15% compounded return. So remember now your FD is probably only 2%. We're doing 15%. We're trying to target 15%. So that's 7.5 times what you will get in FD. Yeah.
Target.
We are already in a very bad scenario today, right? I mean, market is down, it's bloody. The last 3 years has been really bad, right? If you look at this, this is our return so far, right? It's been updated in a really bad market. Let me just show you where we're at. This is a $200,000 portfolio. So we started here with 200,000, okay? And you guys can access all this, right? So you can go and see the whole thing. Today, after 3.9 years, so we're running this so it was started in 6th of June 2016. So after almost 4 years, our absolute return is now 42%. Now, it's nothing fantastic, okay? Nothing fantastic because we're in a very down market. Now, how do I know it's in a down market? Because if we benchmark ourselves against the index, if you had bought an ETF or index stock, you would have been down minus 15%. Okay, just to give you an idea, so that means we outperformed the index by 57%, right? Okay, our compounded return net of all your trading costs, everything is 9.39%. Okay, using value investing, and this is a published portfolio, right? So in a bull market, our target is to get 15%. But depending on the market situation, it depends on the market situation. That's all, right? But that's the target. So we're turning 200,000 to 400,000 now. Right now is 284,000.
Yeah. So most importantly, these are all published for you guys to see, right? So it's not a portfolio we just put up and put, and make sure it makes money. No, this has been going on. This portfolio here is 3.9 years, isn't it, Alvin?
Yeah, 3.9 years.
Yeah,
So
for
we
those who
set it every 5 years. So 200 became 400. So actually we kept the 400 there, become an 800 lah.
Yeah. So this is where our members, if you are a genius, you're subscribing to the genius package, you are able to see this portfolio. There'll be a total of 5 portfolios, right? That they are able to look at.
They can track 5. On top of that, they also get access to 5 portfolios as well. 1, 2, 3. Ricky runs one. So if you look at Ricky's one, Ricky started with 500,000. It's now 2.2 million again. It's up 433%. So he's even better. But it's a much longer time. Right? It was 2011. Okay, so it's almost coming to 10 years already. This is 𝘕𝒑𝒊𝒕𝒚. He started with 57,000. Today it's 124,000. Started in 2012, right? These two are stocks that we just started, right? Just started. So as of yesterday, our 10,000 portfolio is up 0.5% today. Okay, that's it, right? Yesterday we started the Sharia portfolio. It is up 0.89% today. All right, this is just one day, all right, but it depends on the market.
All right. Well, yeah. So yeah, guys, again, just text us or WhatsApp us, not text us. WhatsApp us at 84082070. Again, 603-8408-2070 to have an access to the portfolios and also all the other benefits, right, including our Equities Tracker platform. So for those who are attending our ET Online campus who learn the stuff that Alvin teaches, especially because he's looking at value investing, you have to get this package because that's where you have the access of the Equities Tracker portfolio to apply what you have learned. All right. So I think we are already about time. The Mandarin session is going to start in 2 minutes time. So one last announcement, right, Alvin? I think we have a special guest tomorrow.
Oh, yes. So thank you for reminding me. Okay, guys, we actually have a very special guest tomorrow. I'm sorry I can't do it 8 o'clock. It has to be done at 7 o'clock, all right? So we got a professor from University of Auckland, New Zealand. Actually, they're 4 hours ahead of us. So he actually wrote a very brilliant article about what type of businesses will survive COVID-19. And I actually managed to get him to be on the show, okay, tomorrow at 7 o'clock. Not 8 o'clock, 7 o'clock. So do tune in. If you're stuck in a jam, just switch on your Facebook or YouTube. He's going to be joining us actually 11 p.m. his time. So he's quite generous about that. And you guys can ask. I've actually posted the link of the article that he wrote so you guys can read up before you actually virtually meet him. But we're looking forward to that session at 7 o'clock tomorrow. So if you're a business owner, even if you're not a stock investor and you're a business owner, I think that's something you may want to check out to give you some ideas.
Yeah, so because this is from a professor, I mean, it's not for just investing, right? I mean, I think not just business owner, I think employees also want to know, right? Whether he's in the correct industry.
Whether you need to reskill, huh? Yeah, so
yeah,
invite
guys,
your friends, tag you, share,
Yeah, just invite your friends. I think they will benefit a lot from this, right? So please do share this session to you guys, to your friends, and you can get the post here. It's already posted today. Just share that to your friends or to your Facebook page. All right. So guys, thank you very much for joining us in tonight's Kopi Time. I hope that you now see the master key to really release your potential investment portfolio, and that is to manage fund. And I hope that, if you are still new, join the Genius package so that you also get a guide, right? We have the different levels of portfolios, different sizes of portfolio, where you can just pick one and follow, and hopefully that you are able to do better and be better than the portfolio that we have. That's what we wanted you guys to achieve. All right. So thank you very much and good night. And I'll see you again tomorrow, right? At 7 p.m. or not 8. Tomorrow 7 p.m.
7 p.m.
All right. Good night.
Bye-bye.